Hi, this is Tim Biggam, and this is Vol 411 on a post-Fed trading day. Fed had their announcement yesterday. As expected, no hike in interest rates, and really hinting at the fact that they look at inflation as transitory, which means they'll probably be sitting on their hands longer than expected. We saw big earnings coming out of Apple. They certainly beat on the top and bottom line, but the market reaction somewhat muted given the earnings beat. We see now the big tech names which dominate the S&P. So we saw the VIX briefly with a 16 handle this morning. Last I looked, it was up slightly at that mid-17 range. We'll see if it can convincingly trade towards that 15 level where it never closed a few weeks ago. Otherwise, we're looking at everything pretty much, lukewarm as far as volatility. We're seeing the term structure vol, really no change here. We're seeing the skew hover right around that 140 level. We are seeing the VVIX, which is basically the VIX of VIX, creep back towards 100, so implied volatility on the VIX option prices getting a little bit cheaper here. Put call ratio yesterday well above 1. Today almost approaching the 0.25 level as call trading has dominated, especially out in the traditional June and July's as a couple big call spreads went up, perhaps big institutional players taking advantage of lower VIX and lower VVIX, right? Lower option prices on the VIX to safeguard, put in some upside protection on the VIX, in essence, downside protection on their portfolio. So otherwise, I think the next week or so will tell which way this market wants to head and which way the VIX wants to head, given that we've had big earnings and the big Fed announcement out of the way. So until next time, this is Tim Biggam, and this has been Vol 411.